Calls for today's market. Julia, good morning to you. After that sharp fall on the local equities yesterday, are we likely to see a bit of a recovery, a bit of a bounce back today, particularly in those yield plays like the banks and Telstra that was so heavily hit?
Liz, the SPI futures are pointing up 0.3%, and we saw a pretty mild session on the US, so we are hoping for a bounce back today. Looking back in history, and actually since 2000, we've seen 103 days where we've seen a decline of 2% or greater on the Australian share market, but most of that has been after the global financial crisis. In fact, pre-2007, we've only seen 20 such declines, but of course after 2007, we've seen 83 declines of that size. We have a look at it year by year. We've seen increased moves of 2% or greater on the downside after 2007. In 2007, we saw around about 9, but in 2008, we saw 40 days where the market fell more than 2%. 2010, we saw 7 days, and 2011 back up to 13. Now, I guess the good news is last year we only saw 3 days. We've seen a decline of 2% or greater now twice in 2013 so far. If we have a look at the day after and how historically we've seen markets trade after a decline of this size, 56 times we've seen a positive impact by the market on the day after. So around about a 50-50 chance that we could see a positive day today. Of course, all eyes will be on Japan, and that's after the massive tumble of 7.3% yesterday. So no doubt the Australian market will be keeping a close eye on Japan. But all in all, it does look like it's going to be a pretty cautious on the Australian share market. In terms of commodities, we saw copper down by 2.3% and gold up by 1.8%. So we may see an impact there. But it does look like a bit of cautious trading after the big tumble we saw yesterday.
It's been a pretty volatile week all in all for equities. We've seen a series of profit warnings coming out of the mining services sector for a number of those companies. On the brighter side though, those stocks with exposure to the US continuing to benefit from that greenback strength, particularly the likes of QBE. Talk us through some of the winners and losers this week.
Absolutely. The big movers have continued to be in that mining services space. Fleetwood, the worst performer out of the top 200 with a fall of 35%. We've also seen Boart Longyear down by 20% and Austral losing 12%. So those mining services companies were the places you didn't want to be this week. On the flip side, some of the best performers on the ASX 200, we've seen Mesoblast up by 9% and EWC continuing with a strong gain, up by around about 8% this week. But all in all, it's been a difficult one for the Aussie market. We're down 2.3% for the week to date so far. It has been a week where we have seen those yield plays being sold off. In fact, if we have a look at the worst performing areas this week, there have been the banks, the property, as well as the telecom stocks. On the flip side, we've seen a little bit of buying coming into the materials space this week. So we are seeing the material sector in the black at the moment, and the information technology space has also done well. But all in all, it does look like it's been a week where we've seen a major sell-off in the mining services area as well as the high yielding areas.
Julia Lee, thanks as always for joining us. Great to get your analysis.